Hey everyone, CryptoVatsik here with another TA video for you today. If you enjoy this content, I would really appreciate it if you gave this video a like. Nothing of what you're about to see is considered financial advice. Let's get right into it. Okay, today I'm going to be covering Rose, and it's been about 2 months since my last video on it. And at the time of that video, we were trading right here in December 2022. And ultimately, the main idea was that we had this area of established demand right here in green. And so on a macro level, a loss of green, I expected that we would retest the equilibrium of this downward sloping channel. We had seen a pretty harsh rejection after sweeping all of these highs with this short squeeze right here at the top band of this downward sloping channel, meaning that the trend was still pretty bearish and strongly bearish. So at the time in that video, if you did see it, I was leaning bearish toward the direction of a lower level tap of this EQ, as denoted with this squiggly right here. We almost got it, not quite, but we did definitely drop down to lower prices. And at the time, my main trigger was really this 4-hour channel. So we had this 4-hour channel that we were ranging within right here from our swing high to our swing low. We had this really weak attempt to reclaim the equilibrium and a very strong reaction that rejected price back down to the bottom band with a second strong rejection. So the signs were there that we were likely going to lose this level. And here's our next impulse candle confirming or triggering that we were going to lose it. So with that information, my expectation that we would drop down to a new area demand as low as possibly 3 cents. We did not get a tap of the EQ. We established new demand here at about 3.5 cents. And I had said that when this does shift, that we're going to see completely different price action. So we formed this bottom. We technically got our market structure break on this new fresh high in comparison to these lower highs, and all the while consolidated underneath resistance until we flipped to the upside, bullish consolidation above that level. And then it was off to the races. Flipped bullish, filled in this void, and retested the bottom band of this range that we had prior. So really nice price action and information to tell us that there was a trend reversal. And then of course we got our low time frame breakout of this downward trend, with our macro high time frame breakout being this low here of the overall downward sloping channel that you had seen earlier. And you'll notice it's also a pretty critical reclaim of the green demand zone that we had, which was essentially that shelf of support since back in June last year. So that's just a few ways that you can spot weakness in price and a possible loss of a key level, as well as identifying how a bottom could form, and when the tides shift, identifying that trend reversal. All right, let's just flip back down to the daily here and look at this from a high time frame perspective, and we'll get rid of this channel for now. So a few key things here that I want to pay attention to. One being, for the likelihood of the bottom being in, this green zone clearly must hold. I'm going to extend it up a bit just because of this consolidation that we had in here previously. So clearly we had a nice push up. We swept this high, ultimately making a lower high in comparison to this high that we had back in August, which means the overall trend is still bearish. And since we got 2 taps of that trend, I'm going to mark out this one as well, which has 2 taps as well. So you'll notice some form of a descending wedge within the red trends. Now, typically descending wedges can break to the upside, especially in bull markets, but we're in a bear market and I think we're forming some sort of bottom soon here. So it could take lots of time to play out within this wedge. I think it would be pretty bullish for a push higher if we're able to hold this 5.5 cent level. This comes from our prior area of support that we had above green. That was our resistance back here in June, and then it was our support over here in September, and then it formed our area of consolidation right on that level here in January most recently. So you hold that level, you consolidate on a macro time frame, and you put pressure on this downward trend line. I think that would be the bullish case. If we push back up into this breakdown level here and we reject, then I think the likelihood of this 5.5 cent level holding is less likely, which may sound obvious, but the vice versa to that would be if we dip a little bit further, we have a strong push back up, and then perhaps we start consolidating around these exponential moving averages, showing a little bit more strength in the market, perhaps a tap of our prior consolidation in yellow. This is the scenario that would lead me to believe that 5.5 cent level would hold, or at least is more likely to hold. But if we just get that classic ABC down, then it just looks like this move is finished to me. We want to be putting as much pressure on this downward trend as possible and start to balance out with these exponential moving averages, rather than something like this where we shot up above the 100 EMA with a pretty sharp rejection, and then we were well beneath the 100 EMA again pretty shortly after. I'll go ahead and say I think it's going to be very difficult for price to breach this low, and my expectation would be even if we do lose this 5.5 cent level, so say we reject and we come back down even towards green, it's very possible that we revisit those lows. But like I said, I think on a macro time frame we are starting to form some sort of bottom that could take us into the later parts of 2023. And of course this is contingent on the fact that Bitcoin does not capitulate further. If this does for some reason show a lot of strength and say Bitcoin tanks and we do come down and we do breach this low and say we get another tap of the bottom trend here, I think that is a absolute buy zone. But again, for this to happen, Bitcoin would really have to drop a lot further. And of course, on the way down, people would start seeing price trade around here, and they'll be calling crazy prices. They'll be saying, no, it's dropping down to here. And then of course, in the grand scheme of things, that's likely where we bounce. These coins are down 80, 90% already from the all-time highs. So we're getting to that point of accumulation, absolutely. And I just think it's going to take some time throughout this year. I would like to see 5.5 cents hold. That's going to be my directional control point level, meaning I'd be fine with some further chop above that level. And perhaps it even goes into like April. But in my opinion, so long as we hold that, we are building a bullish case to break out of this downward trend and reclaim this prior high. And like I said, if we come up here and reject hard, back down straight to that DCP level at 5.5 cents, that'd be a sign of weakness. And then I think we would probably see at least green again, meaning bears are basically fully back in control at that point, and any form of a trend reversal is now finished. But that's fine. I mean, honestly, long term, this is how bottoms form. And this is where it demands patience from you as a trader and an investor. And then that's where essentially time capitulation comes in. You have price capitulation, where you see a steep drop and a lot of capital selling at once. And then you see something such as time capitulation, which is basically just this zone of flat line, boring chop, and people get bored. They take their money out of a coin and they put it elsewhere, thinking they're wasting their time. Meanwhile, price is really just building up that bottom. From a trading perspective, with a little bit shorter time frame, I must say that the opportunity lies in a bearish retest to go short. It's fine to take longs down here, you know how you have your stop loss, but essentially you're just going to be longing back up to that breakdown level because it's unlikely that we just straight shoot through resistance. What's more likely is we just continue to chop within an overall range here. So be looking for shorts on a swing high, basically just down to that low, or possibly back down to the DCP here, whatever suits your trading strategy. But here I'm not as clear with taking a long. I don't feel like I have an edge. I think this is just going to take longer to play out, and I think this could just run stops continuously pretty harshly. Versus back here, I mean, this was a bit easier, right? We had our trend reversal. We reclaimed a prior low. We reflipped SR levels. We had swing highs, we had swing lows. So taking a long in here with your stop loss below that low would be perfectly fine targeting this prior high. You know, that's a really nice trade. But at this point, I'm just not seeing anything like that with the current price action. So sometimes the best trade is no trade. Sit on your hands, wait for the price action to develop until you see an opportunity develop and form. And there's a few ways to identify this top. Obviously, everything's in hindsight right now, but a couple things that you could have done beforehand was A, mark out this prior high that we had from back here in May with this minor consolidation here until that level was lost. So that's a level to look for. You could not have drawn this diagonal because at the time, who knows where price would have gone, right? So one of the things I would be checking in on is relative strength index. And what you would have seen is a pretty strong bearish divergence. So we had a high in RSI here with our high in price. And then we continuously made lower highs thereafter while price continuously made higher highs. So you knew eventually that this was definitely going to top and reverse back down. You know, whether you sold here thinking it was the top, or you sold here thinking it was the top, or maybe you actually sold the top. Either way, on your long, you would have sold at an elevated price and it would have been profitable. Nobody sells the Pico top, but as long as you're selling somewhere near the top, then we're happy. Now, what I would like to see before considering taking a long is ideally we'd make a low, we'd chop around a bit, and then we make one more low. And once we've made that lower low, I'd be carefully watching RSI to do something like this, where we make a higher low. This would just be the vice versa of what we got up here. It'd be a bullish divergence. And it wouldn't mean that we're straight to break out above resistance. It would just be a good long setup, like I said, to target this breakdown level. And that would be a decent trade. You know, we're talking like 20% potentially, right? So that's what I'd be looking for, at least maybe on like a 4-hour time frame or 12-hour time frame. Keep in mind, we are on the daily currently. So just another way of looking at it. If you are of the mindset that this is an impulsive move, which the more and more I look at it, I'm not so certain of, but if that was the case on a high time frame, you would be again looking at a correction down to the 618, which is in line with this area of consolidation we had until we broke to the upside, and in line with my directional control point level right here at 5.5 cents. So it'll be pretty telling if we do test that area again, what the longer term forecast is going to look like depending on the reaction to this level at the 618. But I see no reason really to predict price action too far into the future, because ultimately you're looking for those trade setups on a lower time frame. You're looking for a structure like this and a breaker to take a long, and that's great. And then maybe you do take some off the table up here, because if that is truly the top and then we come back lower, at least you took some profit. But if you do leave some on the table, then perhaps we do consolidate and then we do get that breakout. But it all stems on your lower time frame entry on the criteria of the current price action versus saying, oh yeah, this is definitely our bottom. and we're going straight to all-time highs or right through resistance. It's like, no, stay objective and trade what's in front of you and have a bit of a plan in the meantime, because even if we do that, it's fine. But you need to have a strategy for both directions in the meantime. If you have any questions or thoughts, let me know in the comments below. And if you found something helpful in this video, I'd really appreciate a like on the video. And don't forget to hit that subscribe button. As always, you can follow me on Twitter at CryptoVatsik. And again, just a reminder, if you're looking for a new place to trade, MEXC Global is a pretty cool platform and they're offering some pretty significant rewards. So check it out if you're interested. Otherwise, thanks again for joining and we'll see you on the next one. Peace.